if you don't have money and you're just trading all day, you're making money on it. Like, you're like, all right, you know what my number one input is? It's called momentum. And then I go on X and everyone says I buy nuclear, I buy quantum, I buy this, and that's all I do.
Hello, everyone. This is BTC Insight, and welcome to yet another deep dive into BTC Insight. Before we jump in, make sure to hit that like button and subscribe if you haven't yet. You won't want to miss this.
Jordi Visser begins by reminding us that 2022 was far more impactful than most people realize. While the headlines focused on inflation and rate hikes, the real damage occurred beneath the surface, a silent bear market that deeply wounded the venture capital and crypto sectors. He describes it as a K-shaped economy, where the upper segment continued to thrive, while the bottom, filled with smaller startups, speculative assets, and over-leveraged investors, collapsed under the weight of the 2021-2022 bubble. VC firms overinvested in SaaS and crypto startups, and when the bubble burst, capital became trapped.
Over the course of this year, I've been more involved with meeting people, let's say that lost a lot of money in 2021 and 2022, that were on the investor side. I think one of the things that we all have to understand with inside this space is that 2022 really was a much more important event than we all realize in terms of it causing a bear market without actually seeing it. Like, as far as I'm concerned, the K-shaped economy, that stuff on the bottom, it was really hurt badly by a bubble that happened in 21 and 22. And there's no way to put it. It was a bubble. And it was a bubble for VCs spending money on SaaS companies and on crypto. And I don't think we appreciate how when AI came in late 2022, that was also an incredibly disruptive force. And the reason it was disruptive and how crypto and the VC world are aligned, if SaaS, those investments in SaaS don't come back, then they have a lot of money trapped in crypto already and in SaaS. And I believe that this has been an overhang that reminds me a lot coming out of the dot-com bubble, which took a long time to get out. And this overhang that's felt shows up in supply. What Bitcoin's going through at this point this year, we saw in Ethereum earlier in the year. We saw in Solana. There was just a lot of supply that had to have been investors and people that own businesses and things that still needed to liquidate in something. And only now do I think between the PMIs and the Fed cutting rates that we're actually going to see that go up. I think on the crypto side, we're getting through the supply. And I've spent a lot of time. I heard your interview with Novo, whether it was last week or the week before. And I listened to a lot of the things he said. I actually quoted them a couple times in the past week because he talked about the selling that was happening and how they had.
Yeah, I mean, he sold for one OG. What was it? $14 billion.
Yeah, I think it was 9. What he said,
9 billion. Yeah, whatever. Yeah, huge number.
It was a huge number, and then subsequently, I've heard more and more. And I've heard from most people, and you and I spend our time as macro people, like, who's selling? Where's this coming from? And the reports have been that all of it's been coming from Asia. It hasn't been, it's been mainly from Asia. I've heard China a lot of times, but regardless of where it's from, I also think there's another element of AI that has disrupted at least part of this, and people don't spend enough time. I spent a lot of time on the Bitcoin miners and understanding the relevance they have. They are overwriters constantly. They need to hedge out their supply or what they hold to deal with their earnings. But also in China, you've had a lot of stories going around this year about banning on more mining and cracking down on people. And this is, I know it happened in 2021, but there's been a lot more stories and a lot more reports. And I know from my own investigation in this that this year has been a very scary time for global central banks in terms of what Trump and the administration is doing with stablecoins. And everyone's worried about, is the U.S. now creating a digital economy, which is going to be backed by the dollar, and this is going to be this whole thing. So I think there's been a lot of things with artificial intelligence and with crypto this year which have been disruptive. I think the overhang has been there. And I think most importantly for everyone out there, you've been able to make money in things like NVIDIA and Micron and Chinese stocks and energy stocks and all kinds of semis where you can get 3, 4, 5 baggers, 6 baggers, quantum stocks. Retail's had other places to play this year. And so if crypto's not working, they're really smart. Like, okay, I'll wait till it comes back. When it's easy money again, I'll come back in. So I think that is typical of coming out of a bear market. I think that's typical of wait till we get back into it. And I see it broadening out next year. So I do believe the 4-year cycle myth, which does match up with the S&P and NASDAQ going down, I think that is ridiculous, with rates being cut, earnings accelerating, and the build out of CapEx, which is going to be $5 trillion to get to 100 gigawatts by 2030. Unless you're going to bet against that, which a lot of people seem to be hoping is not going to happen, it's going to happen, and that's going to keep the earnings growing. I have one eye open. So I've spent a lot of time trying to figure out in my mind when we get to the point where humanoids are real. And when I mean real, I mean where it's a foregone conclusion that 5 years from now, there's going to be millions of them out there. Abundance is a very scary thing to me. And I've had to come to terms with what it actually means. And for me, because it's very bad for labor, it's very bad for politics and society. And how do you get through this whole identity breaking thing, which I'm sure you've either thought about or you've had people on which have talked about it. And I've kind of come to the conclusion that when people say, well, there has to be a form of UBI, I actually think, and I don't know who said this first, but someone, when I was really doing my research on Bitcoin, said Bitcoin's all about time. You have to understand, you're getting your time back. You know what's interesting about that is everything in the fiat system takes time. It's all about borrowing money for 20 years out. Well, if every day moves what used to be a year, then you're not borrowing money for the future, because the future is completely unpredictable. So it doesn't happen. So eventually what goes on is the entire leverage in the fiat system has to come down. It has to. If the money's moving into stable coins, what's replacing, and this is going to get into something which I'm sure you've had charts of before, but remember how back in the early 2000s, we would look at the money velocity chart, and you had to get money velocity up.
Yeah.
Well, with AI agents, you know what's going to happen? The velocity of money is going to go through the roof.
Same with stable coins. Those two combined, a velocity.
That's what I mean, is that the AI agents will be trading stable coins so fast. The other engine, the other fiat system, the one that has cycles, and the reason so people get, I don't think there's recessions, is because I believe the economy is now 70% the digital economy, 30% the fiat in terms of growth rates. But the size of the fiat system is still much bigger than the digital one. And so the cycles still exist in the fiat system. We're seeing that with commercial real estate. We're seeing it just doesn't matter as much because it's not as important as it used to be.
This leads to one of Visser's more profound points, the rise of abundance through AI and humanoid robotics. He believes that once humanoids become mainstream and we reach a world where millions exist within 5 years, we'll face a deep societal challenge. Abundance threatens traditional labor markets, politics, and identity. Universal basic income, or UBI, might emerge, but in his view, Bitcoin itself could represent a new form of time-based value exchange.
The stock market valuation will change. And the reason it will is because theoretically, like I'll use NVIDIA as an example. So you probably, I'll give you some numbers. So the current forecast for revenues for NVIDIA for sell side, the average is about $425 billion for 2030. They're currently just over 200. Okay, so let's assume it's 225. So they're going to double. The problem is we know there's going to be 100 gigawatts minimum that needs to be built out globally. So if you do the numbers and it's 50 billion a gigawatt, that's $5 trillion of CapEx. And we need this stuff. Now that's using today's prices, so no inflation. So let's leave it exactly the same. And right now NVIDIA has a complete dominance on the data center side. That's for data centers. So you can go do the math. Out of the 50 billion, about 40% on the low end is for the compute, and the rest of it is the power and the concrete and the stuff like that, with power being the majority of it. So when you do the math, they've put in almost a 0% chance that NVIDIA is going to keep their market share or that the CapEx is going to happen. It's like a 10, 15% in my probabilistic. That's why until that number gets to the point that it's actually high, then consensus on the AI build out is just very low. People don't believe in it.
Well, because you can hear it in everybody's voice.
Exactly.
There's a bubble in calling for an AI bubble.
Yes, and you're hearing it in the people we know and we talk to, the people with money. The more money you have, the more you doubt it because you've been through this before, and this looks like a bubble. But if you don't have money and you're just trading all day, you're making money on it. Like, you're like, all right, you know what my number one input is? It's called momentum. And then I go on X and everyone says I buy nuclear, I buy quantum, I buy this, and that's all I do. So you don't have to go do your research. You don't have to go through it. And as long as that's happening, retail is dominating this. So as long as NVIDIA's probability is low, then I think this stuff will go higher. The bubble will occur when Wall Street starts to price NVIDIA at a level where they've built it in. What would speed the process up is if computers were managing the majority of the money. So they would take NVIDIA up because the probabilities, it makes no logical sense. But there's two forces. There's Wall Street and then there's passive investors who are doing nothing. And so there's a lot of money that isn't actively managed. And then for the stuff that is actively managed by humans, they don't agree with it because they've been through this before. And as I've been using the Charlie Munger quote, show me your incentive, I'll show you the outcome. There's no incentive for wealthy people to bet on AI because they've already made money, and the outcome is if they're wrong, they don't want to be wrong. I've learned that only through, why don't you like Bitcoin? And I've been to enough dinners now. I don't know how you handled it for so many years. Why don't you buy it? I can't deal with, there's always one of them at the table. I was at a Russell Napier dinner recently, and there was one guy at the table. I'm like, are you kidding me? Now I have to do the Bitcoin thing. So I just kind of shut down and I laid low. But Tesla's the same thing.
Oh, yeah.
At least Tesla, there's a human being and he's built 4 other companies that are massive and done all these things and he wants to go to Mars. But Bitcoin and Tesla are the exact same thing. No one believes in them. They don't want solar. The reality is, like you said, it's a race. We have to get it done. And when you realize the shortage we have in transformers and in gas turbines, you have no choice but to go another route. And the solar route is going to be part of it. The battery route is going to be part of it. When you start getting lithium investments, that's them pretty much admitting that, okay, we need batteries. And it's not just for drones and it's not just for humanoids and defense weapons. It's also for, okay, there's a reason why Elon Musk, when he built Colossus, he's got his big battery packs. There's a reason why his battery part of his side is growing. This also brings the Bitcoin miners in because of the grid optimization, because what the Bitcoin miners are able to do, and this has been something that I learned more about this year, and this is actually an important thing for people to hear because I do think it'll bring the traditional finance world. Every day there's a new way for them to invest in crypto. You obviously had the Circle IPO. So stablecoins have finally, people didn't even hear of stablecoins a year ago.
That's another one I need to talk to you about. I'm sorry, I keep writing notes of things I need to talk about.
So okay. That got in there. But the Bitcoin miners are another place. And the reason is because they're directly connected to AI. They've built out these data centers. They have this equipment. And in the case of Texas, they have 4 gigawatts of the 80, I think it's about 85 to 88. So it's a sizable portion. Now, the value that they bring to the ERCOT to Texas is the fact that if you have solar, obviously at nighttime, they're not producing anything. So what is important is that the prices, even during the lower times, are higher during the off times. And this is what the Bitcoin miners do because they're arbitragers. So they do things when the price is really low. So it's kind of like having a restaurant where you're closed at night. Well, if you could have orders at night when the tables are empty, then your business is more profitable. So what the Bitcoin miners do is they act as virtual batteries. And so if ERCOT's having a problem like it had in 2022 and pipes are freezing and the electrical prices are going through the roof, then they can call the Bitcoin miners and they won't mine anymore. And so the miners have become important. And the reason that is in there is that more and more people are looking at grid optimization, no matter where they are. And this was a big negative because Bitcoin miners were negative on the ESG side. In fact, everyone, when I got into the Bitcoin side, is like, oh my God, this is so inefficient. And so everyone is starting to connect. So I do think when you go through the power side, people have to look at so many places across the power side. We're going to be using batteries. We're going to be using solar. We're going to be using boilers. We're going to be using generators. We're going to be using everything because, like you said, it's a necessity. And the gas turbine shortage, of which there's, I think, 4 or 5 companies that make gas turbines of any kind of size in the world. If there's a shortage there, that's 5 companies that are not supplying the power. They're holding things up. And so a small boiler company, a small battery company, nuclear like investments, this is kind of the PMI thing. Those dollars start kind of moving around into other places, and solar is definitely going to be one of them.
In summary, Jordi Visser's message is both cautionary and optimistic. He believes we are emerging from the shadow of the 2022 bear market, but the next phase won't look like the last. The intersection of AI, crypto, and energy is creating a new economic paradigm, one where digital velocity, automation, and decentralized finance redefine the pace of growth. The skeptics will see bubbles, but the innovators will see revolutions. Just as the dot-com crash paved the way for the internet giants of today, the crypto and AI downturns are laying the groundwork for tomorrow's digital economy.
That's it for today's look into BTC Insight. If you enjoyed this deep dive, hit that like button, drop your thoughts in the comments, and subscribe to stay on top of all the latest insights. Keep questioning, keep learning, and we'll catch you in the next one.